Ladies and gentlemen, good morning, good afternoon, good evening, wherever you are in the world, whatever time it is. Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Friday, September 15th, and it is 5:26 p.m. here in Northern California. I know I've been a little incognito the last few months. Many of you know I was hospitalized in early June, working with ear, nose, and throat specialists at the moment to try to drill down into what my actual condition is. Apparently, I've had this condition, and he thinks it's one of two things. Since I was a little boy, I've had 5 such episodes and was hospitalized for 3 of them. It's only been in the last couple of weeks that I feel like I've emerged from the episode in large degree. But the symptoms persisted for quite some time. And one of the symptoms was an inability to look at a computer screen for more than an hour a day. I'm not 100% well. My maximum now is about 2 hours a day. But that has provided me some opportunity to get back to the charts. And I've been looking forward to the day when I could get back to talking to each and every one of you. Hope you all are well. Not a whole lot has transpired in the crypto market since I've kind of stepped back. Looking at the charts, they're pretty much the way I left them in terms of the macro charts. And I still have pretty much the same expectation. But what I want to talk about in this video is I want to compare the Bitcoin, Solana, and XRP chart. And I ask in the title, which is the better buy? And I mean something very specific by that question, which is the better buy? I have been using an indicator that indicates, basically calculates within a particular swing where the premium, equilibrium, and discount ranges are for the particular asset. Now, it looks different on the daily than it does on the weekly. It looks different on the 4-hour than it does on the daily. You change the time frame and it changes where these zones are, because within each time frame you've got a high and a low within a swing. You got a swing high and a swing low, or swing low to the swing high, depending on whether it's an uptrend or a downtrend. And within that swing, you've got a premium range, you've got an equilibrium, which is right in the middle of the range, then you've got a discount range at the bottom. But you also have order blocks. And order blocks are where the money is waiting, where the institutional money is waiting. So order blocks kind of help us understand where the major support and resistance ranges are going to be. So I've been integrating analysis and conclusions drawn from this indicator and these ranges that it provides me with the typical trend analysis that I do, looking at the different kinds of trends as well as convergence and divergences in the RSI, which is my bread and butter. So the question that I want to approach in this video is, which of the 3 of these assets, BTC, Solana, and XRP, are the closest to their discount range, which means which is the best buy if you were to buy it now. So let's jump into these charts and take a look at what we are looking at here. I'm starting with my Bitcoin dashboard here, and I'm going to take a look. We're going to look at the daily chart. And what we notice, if I just hide all these drawings, let's just start. Matter of fact, I'm going to hide the RSI. And then what I'm going to do is I am going to, sorry, it makes me do this from time to time and it drives me crazy. I have to refresh the page before I can edit the settings in the indicator. Oh, it's going to make me do it again. By the way, if you're with me today, can you say hello in the chat so I know you're with me? If you're watching, holler if you hear me. I see I got some folks watching, but nobody's saying hello. Hit a brother up, if you don't mind. All right, here we are. So what I'm looking at here is I'm going to turn off. So in this Smart Money Concepts indicator, there's actually a whole lot of things that it shows. What I find is if I just turn off everything but the premium discount zones, I'm looking at the premium, the equilibrium, and the discount from this swing low to this swing high. So within this swing, you've got these three zones. Now notice what it did. It swung from the low to the high. It visited the equilibrium, collapsed beneath it, and went back to the discount. So the concept is within this range, the best place to buy it is the discount. The equilibrium represents the fair market value, roughly, at this time. So another way of doing this is just grabbing a Fibonacci and going from the swing low to the swing high. And what you find is that the equilibrium rests roughly between the 618 and the 0.5, basically right around the 0.5 Fibonacci retracement level. So the equilibrium is basically the middle. And mean reversion theory basically says that the price will be attracted to the equilibrium. So the price is always moving towards the equilibrium. Also, I did a video on Howard Marks's book. Oh, hey, I see a few comments here. Andres, Jerome, and C-Mart. Good to see each and every one of you. Thanks so much. Awesome. Good to see you guys. I did a review of Howard Marks's book, Mastering the Market Cycle. Let's see if I can find it. My videos. And there it is. Mastering the Market Cycle by Howard Marks. If you haven't watched this video, I encourage you to watch it because it's not about crypto specifically. It's about understanding how market cycles work. And Howard Marks is a master. And so I read his book, and then I did a review of his book in this video. So I would encourage you, as a matter of fact, I'm going to drop this, if I can, this link into the chat so that when you get a chance. What's up, RW? Check out that video because it will aid in your understanding of all things in terms of financial markets and understanding how they work. It's not about technical analysis per se. It's about market. But anyway, in mean reversion theory, there's this concept, and Marx talks about it, where an asset is undervalued and then it swings to being overvalued. And it kind of revolves around this median point where the fair market value is. Okay? But it always wants to come back to the fair market value. And then what happens is the fair market value increases over time. But the price kind of goes up and down around the fair market value, if that makes sense. All right. So feel free to ask questions, by the way. So what we see here is we've got a premium, we've got an equilibrium, we've got a discount zone. But what I want to see, this gives me one more thing that I want to look at that is actually quite important. So I'm going to open this up again, and I'm going to turn on internal order blocks. Okay. Now watch this. So notice we still got our discount. It's the little green area in here, and then our premium at the top, and then our equilibrium in the middle. But then engulfing this discount area and above it is a huge order block. And then right beneath the equilibrium, we've got another order block, and then we've got two more above the equilibrium and beneath the premium. Now, whenever the order block is above the price, these are sell orders. And whenever the order block is beneath the price, these are buy orders. Okay? So we've got buy orders going all the way down. Now, what happens is these order blocks are created by institutional investors when the price takes away. Just, you have this takeaway, just launching pad. Institutional investors put buy orders down in this region here, and then they just wait for the price to return. So this is why, notice, for instance, how long this wick is. Long wicks, what those long wicks mean is when the price came down, there was so much money waiting down here to buy it up that it just pushed the price up aggressively. So when you see long wicks, a long wick on top is aggressive selling. A long wick on the bottom is aggressive buying. So every time the price came down here, it was aggressively bought up. Okay? Now watch this. Notice that the buying is not as aggressive over here as it was over here. I mean, here for this whole region, we could not close a candle beneath this line. It's because there was so much money waiting beneath this line that every time the price came down there, boom, it just got bought up, bought up, bought up. But notice that the candles start creeping beneath the line and then boom, capitulate all the way down to the discount zone again, and then it gets bought up again. So this whole move here absorbed a lot of the buying pressure that was waiting here, but did not absorb it all. So watch what happens. Now we're heading towards this sell block order. We've got this order block here, but it's primarily sell orders. And so what'll happen is as soon as the price enters there, we should see some long wicks on top now as the price is being sold down, all of these sell orders. So now the question is, which level of resistance or support? Is the price going to break through the resistance and go higher, or is it going to break through the support and go lower? And what that depends upon is the ratio of buy to sell orders. In other words, if there are more buy orders waiting here than there are sell orders waiting here, then what will happen is we'll come up here and hit these sell orders and then come back down and hit these buy orders. And if we extinguish, if in this move here we extinguished all of the sell orders, then the next time we come up here we break through. Why? Because all of the sell orders were absorbed. However, if most of the buy orders were absorbed here, then it's the opposite. We come up here and hit the sell order block, come down here, consolidate for a little while the remainder of the buy orders are absorbed, and maybe bounce temporarily, and then we plunge. Why? Or even if we come back, and revisit this sell order block just to extinguish the rest of the sell orders, by the time we get back down here, there's no more buy orders. The support is gone, and we plunge. And where are we plunging to? The next order block. Does that make sense? All right. Now, back to the question at hand. The question is, which is the best buy? Just based on this schema, which is the best buy? And really the easiest way to answer that question is to go from the current price down to the bottom of the discount range. Bitcoin is right now 6.87% from its discount range on the daily chart. If we go to Solana, same concept here. Solana is 33% above its discount range. Okay, on the daily chart. And if we go to XRP, XRP is 22% above its discount range. You see? Which means a couple of things. Number one, Bitcoin is actually the best buy right now, right this moment. And the reason Bitcoin is the best buy at the moment is because it has already retraced down to its discount zone, and it is closer to its discount zone than any of these other three assets. And so if the market drops and Bitcoin drops down to its discount range, that's only a 6% drop. Whereas if Solana drops to its discount range, that's a 33.5% drop and a 22% drop for XRP. You see? So that means that basically a 7% drop for Bitcoin could mean a 33% drop for Solana, and it could mean a 22% drop for XRP. So at the moment, and the reason why I am stipulating at the moment is because I actually, personally, don't believe that any of these assets is a good long-term buy at the moment. And we have to go to my 3-day Bitcoin chart to see why. So I have been watching this ever since we broke above this long-term resistance here back in January of this year. And basically, I was watching this move here. And juxtaposing it against the lower highs that we were making here in the RSI. So we're making higher highs here in the price, lower highs here in the RSI. That's called bearish divergence. Okay? So based on the strong bearish divergence that I was seeing here, earlier in the year, I called 30,000 as the top. It went up to 31. Then I called a retracement to 24,000. It retraced to 25. Then I called a pump to 32. It stopped at 31.8. And after that, I was actually expecting a bounce here so that we could finish our trek to 32 to 34. And I was completely wrong on that. Instead of that bounce, we broke down, and we broke down hard. I was expecting a breakdown this whole time. The only thing I got wrong was we did not bounce here. And in hindsight, hindsight is often 20/20. It's clear that we weren't going to get a bounce here, but, you don't get everything right. That's the nature of technical analysis. You get some stuff wrong. Based on the break of this line of support here in this uptrend, we have a measured objective that takes us down to $16,500. So I have been expecting, and this is what I've been saying all along, that we would break down from this range up here, and that breakdown would take us all the way to like a 50% drop. I mean, a major drop. All the way down here. 38% from where we are now. And 48% from the recent high. I believe this to be incredibly healthy for the market if we get this. Thanks, Andres, by the way. I'm just seeing your comment. I believe this will be very healthy for the market. And now going back to my dashboard, I'll show you why. Because on the weekly, we have a major order block right here in this region, which means there's all kinds of institutional money that's waiting right here. What happens in financial markets is whenever you see a breakdown or a plunge, all it's doing is creating liquidity for the next move up. Meaning, if Bitcoin could go to $100,000 right now, it would. If it could have went to 100,000 right here, it would have. Why was it unable? Why did it need this whole move down? Because liquidity needed to be created. And so along the way, what happens is we break out and there's not enough liquidity. So there has to be aggressive selling so that the liquidity necessary. So the thing we don't understand is the way institutional investors work. They're not like you and me, where we're buying $1,000 worth at a time, or $500, or $300, or $3,000, or even if you're a baller and you're buying $100,000 worth of an asset at a time. That's not how institutional investors think. They're trying to buy $10 million at a time, or $50 million, or $100 million. Sometimes even $1 billion, depending. But remember, there is a limited circulating supply of Bitcoin. When you're looking at the RSI, the higher the RSI is, the lower the supply is. When the RSI comes down towards the oversold position, what it's doing is creating liquidity. It means that selling is happening, and what selling does is it floods the market with supply. Institutional investors create supply. How do they create supply? If you're holding here and you're an institutional investor, and let's say you're holding 500,000 Bitcoin, and you realize that it does not have the momentum to make it to where you're trying to get it back to. Maybe you want to get it to the premium and sell it there. So what you do is you dump 50,000 of them, and the price starts to come down. And then you dump another 50,000 of them, and the price starts to come down. And every time people think, okay, it's recovering, you dump another 50,000. And you keep doing that periodically until maybe you've sold 250,000 of them, and the price is dumped all the way down to where you want it. You've already got your buy orders waiting down here. So you're not scared to dump 50,000 of them at 31,000 because you're going to buy all of them back and more at 16,000. So what institutional investors do is they create liquidity by dumping a bunch of them, flooding the market with supply, creating panic in the market, and then a bunch of us, we start selling our assets. And then the price comes down. And as the price comes down, because this is the key, if you're an institutional investor, you don't want to buy it at the equilibrium. And you definitely don't want to buy it at the premium. You want to buy it at the discount zone. And on the daily chart, you want to buy it as close to the discount zone as you can get it, right? So on the weekly chart, this is where the discount zone, actually, they're not going to get it back down to the discount zone. They know that on the weekly chart. They're not going to get it down here. It's beneath 7,000. But that's why the order block is here in the $16,000 region. Does that make sense? Sorry, it's my wife. All right. So I hope that makes sense. But I am expecting a breakdown. I am expecting the market to break down. I've been expecting it for months. I've been calling it out for months. And so far, my analysis has been correct in terms of the macro moves, We hit 30 and we retraced to 25. I expected 24, but we stopped at 25. I expected 32. We stopped at 31.9. I was wrong here. I expected a bounce. I was completely wrong there. Instead, we collapsed. But I believe this is the beginning of a downtrend that's going to take us down, right down to this order block on the weekly. Then everything's going to be a good buy. Everything. And that's going to be the beginning of the next bull cycle. And once that starts, buy and hold for 3 to 4 years. And then wait till the hype starts again and everybody is so excited and starts selling little by little and taking your profits. The biggest regret I have from the last bull cycle was not taking profits. You know, I was just too elated by the gains that were happening in the market. And I'm not making that mistake next time. All right, that's all I got for you for today, folks. That's all I got. I want to thank each and every one of you for tuning in. Appreciate each and every one of you. Check out that video that I dropped in the chat. Check out my Patreon at patreon.com/cryptogenic. Also, I wanted to give an update that my wife actually raised the money she needed for the orphanage in the dormitory at the orphanage in Indonesia. As soon as possible, I'm going to get some video and pictures of that facility. And I want to thank those of you who joined my Patreon to help with that. We raised those funds, and that project is nearly complete now. All right, that's all I got today, folks. Remember, this is not financial advice. I'm not a financial advisor. I am an enthusiast, and this is a hobby for me. Yeah, but above all else, I was going to say I don't do this professionally, but I actually do this professionally now. I have one corporate client that I serve, and that has been a great joy. But yeah, everything that I provide here on this YouTube channel is designed to empower you to sleep in peace at night, wake in joy every morning, and walk in love every day. And so please do so. With that being said, this is Cryptogenic signing out.